Banks performed very well with this program. It was, you have 5,400 banks total that participated in PPP, number one. Number two, as we've gotten through the second round, we've seen the average loan size go down significantly. Our forum members have processed 750,000 PPP loans. A little under half of them are average under $25,000 per loan. And over half of them are going to small businesses that employ 4 or fewer employees. So I think overall, the pace at which the Congress intended the agencies and the banks to put these funds out has been met. There's still $100 billion left in the PPP right now. And I think generally the program has performed as Congress intended.
Do you think it's inevitable, Kevin, speaking to some of those subpoenas, inevitable that there has been some fraud that has taken place, and where should the blame fall for that?
I have no particular knowledge. I think, programs all over government do experience fraud, and that's something that we know. But in this case, I think you had a lot of banks processing a lot of loans. Most of them went to their existing customer base because they knew their customers, and that was a logical and expected outcome. So we'll just have to see. Obviously, the authorities need to pursue wrongdoing when they find it.
How bad, Kevin, is the outlook at this point for bankruptcies and credit losses for the banks, given the severe recession we're facing and some of the slowness in reopening?
Well, as you saw at the end of the first quarter with the earnings, the foreign institutions and other banks reserved and provisioned very, very significantly. They also implemented CECL, this accounting standard in which they have to book essentially expected losses. So you've already seen them be very, very proactive and aggressive in terms of provisioning. You can take a look at the various macroeconomic forecasts and make judgments. And I think each of our firms are looking at what they're experiencing in this quarter, and we'll see what happens at the end of the quarter and have a better idea of what we're all facing at that point.
Kevin, when the big banks decided to suspend buybacks, they did so by issuing a statement via you at the Financial Services Forum, and did it obviously as a group. All 8 of the GSIBs did it together. A lot of talk about dividends, whether they need to be suspended as well. What's your take on whether or not that's plausible, and whether or not we could see individual banks having to do that, but not the group as a whole?
Well, I think we're now in a period of time when the banks submitted their stress test proposals. The so-called CCAR process is underway right now. And that process will determine, in fact, whether the capital levels are adequate for institutions to be able to lend in a severe economic scenario, whether they can meet their regulatory minimums, continue to lend, and they have to demonstrate in that to an extent in order for them to be able to distribute their capital as planned. In addition to that, Vice Chairman Quarles has indicated that they're performing an analysis under which they're going to take a look at how the bank portfolios are responding to these current events that we're going through right now. So right now, I think the question around capital distributions and the plans that these institutions have made through their capital management process, how that's going to fare as a consequence of the CCAR process that we're going through. We'll know the results of that in a few weeks.
Kevin, last week there was some increased speculation around potential M&A within and consolidation within the banking space. You represent, as we said, the 8 globally systemically important banks, GSIBs. What is the chance that 2 of those GSIBs could merge? Is it 0? And what about one of them? How big an acquisition on their own would they be able to make? Would it still only be a bolt-on, or could they make an acquisition of a bank with 100 billion assets or plus?
Well, let me start by saying that as we went into this period, each of these institutions was in extremely strong shape from a capital and liquidity standpoint. And I think their focus over this period has been to use that strength to support the economy. I think that's going to be their focus on a continuing basis as we go into the second, third, and fourth quarters under whatever circumstances we face. There are other built-in considerations and restrictions with respect to what you're asking about. But right now, I think the focus is using the strength to support the economy.
Kevin, thanks so much for joining us. Great to see you.
Great to see you. Thank you.